Just like with media, the financial system is owned and controlled by a select few. More and more conglomerates exist as time goes on. Each crisis brings new opportunities for regulations to be modified to allow massive entities in response to a so-called emergency scenario that is quickly forgotten. Eventually, however, we will regret our passive attitude. You came here for the truth, so let me unveil that for you. Today, we are going to look at this one company that owns 7% of the US stock market. First, I want to introduce this asset under management split of US funds, active versus passive. And you will see this new information going back as far as the financial crisis. And there has been a very clear trend that as time goes on, more people are pursuing passive investments rather than active. And there is one reason for this. As time goes on, people have been deciding to take matters into their own hands. They have been investing in things like ETFs, where an individual would no longer have to go to a financial company and have a team of people managing particular funds that they're invested in and pay a fee associated with that. They can choose to buy an index fund, as an example, for the S&P 500. And that would have a very, very low fee associated with it, all built in. They can trade it like a stock. They can put stop losses in. They can manage it themselves from apps on their phone. And they believe that this is a good opportunity for them. It's going to give them every advantage. And as long as the stock market moves up, there really is no reason to worry. Now, this has really caused a problem for a lot of companies. And you could see they're going in a different direction as a result, because the days of fees are really over. A lot of companies are starting to go away from that model. And ultimately, it's not good for many companies who rely on that. Look at this. The percentage of the S&P 500 market cap owned by Vanguard. That's right. Over the past few years, we have seen their company growing and growing. Nearly 7% of the S&P 500 owned by this one single company. And this shows us that since the financial crisis, more and more people have been investing in their funds, have been buying into this. And that shows us how the money is basically saturated in particular locations. You have different central banks that have been buying, different companies that have been buying, and even when you have individual investors, their money is really pooled together into something like an ETF. And people don't realize that. It's never a good thing. The more spread out the money is, the better. That brings less risk, that brings a better foundation, but that isn't the case. You'll see that here very clearly. Okay, now look at this. Excess volatility, the top 100 by passive ownership versus the rest. You could take this for yourself here on the left-hand side, 3-month daily volatility difference, annualized. Interesting to see that. Moving on, Japan-focused equity funds as a percentage of assets under management, passive versus active. Again, same situation. Passive is obviously gaining market share as time goes on. Japan, the country that owns 75% of ETFs. So when you look at the percentage increasing, understand that it's the central bank in this case that's buying them all. 75%. So you know that even if a 25% of that is falling off, the bank can always come in and pick up the pieces. They already own 75% of it. equity ETF flows by day. Something very interesting has happened. Showing you this JP Morgan here. Just over the past, it looks like, maybe the 24th or so. Since then, of February, there's been a big change. Very big change. And although we haven't seen the market necessarily going in that particular direction over these past few days, it has been quite volatile up and down. But this right here is something that is changing, and I don't know what's going on, but I'm going to keep my eye on it very clearly. Now, switching gears here, talking about pensions. I've shown you just recently how the different areas around the US have decided to say, okay, we were planning on an 8% in terms of the expected returns. Then it was 7.5, 7, and then down and down and down. Now, oddly, New Jersey Treasurer resets public pension rate of return, bringing it from 7% to 7.5, then to lower again over time. There's no way that they can ever increase this. There's no way that they can ever suggest to anybody that the rate of return will go up. I think that this is a complete fraud, and this only actually makes it worse. Don't promise anything. There's a screenshot that I saw before this, looking into this issue. It said pensions are a promise, and I think that that is what people believe, and that is why this is a terrible thing, because people actually think that they are going to get their pensions, and that is unfortunate. Unfortunate for many people who rely on these pensions. Unfortunate for those who are being swindled by this system. They've been paying into that system year after year after year, day after day, and then one day they get the short end of the stick. You thought that was your money, but that's not the case. That's why I try to teach everybody to handle your own finances. If you're expecting a pension and, that's just extra money for you, then great, but you can't rely on it. Okay, now this is right here shows how messed up this financial system is. So you have this Telecom Italia here that you're looking at. And back in 2013, this is considered to be high risk. And of course, it still should be. This is a junk bond, okay? This is a junk bond. Today, it yields nothing, okay? Basically nothing. Has the risk been lightened up? Has there been less of a concern over these years since 2013? No, in fact, right here, 2017, 2018, the risk is much higher. The risk is much worse. The central bank, the ECB, has suggested that they are going to start weaning off of their balance sheet. They're going to slowly, over time, bring it down. Well, that would be even more of a concern because they've been buying the debt of these companies. And you can see that there's been this crisscross action here, which is funny because although I'm not a big fan of US debt, certainly it would seem that that's less risky on a shorter term scenario than Telecom Italia's garbage debt. Junk bond. Call it junk, I call it garbage. So I'm looking at this and just trying to figure out what the heck is going on. Because when you use central banks to manipulate everything, you ultimately cause a crisis. Now, this individual here, this one chart, they're pointing out to the fact that, I believe this was Mish who did this here, but pointing this is where we are. I actually don't agree with that. I think that we are somewhere probably in, anywhere from here to here in this moment here. And I mean, that's not the scale, of course, but I think we still have to come up more before we're going to come down. That's my estimation. And of course, it will come down and we will see the central banks react. I don't necessarily agree with the, where this goes, but I do believe that we will have some sort of deflation that occurs, a real deflation, before the central banks pick up the pace and ramp up those printing presses like they never have before. This year, very quickly, wanted to touch on it, motor vehicle sales and credit. You can see that just in the short term here, something has happened now after this whole, revitalization of the automakers and the getting this to happen again, the boom that was very, very short-lived. Absolutely no doubt about that. Here, motor vehicle sales, you can see a very big disparity. I thought this was interesting. Since about 2014 or so, big disparity occurring between the lightweight trucks, which is the light color here, and the passenger cars, which has come down quite a bit since this time frame. It's been a continued trend. So that's something to note here. I think I'm going to leave it there for today. Just wanted to say that if you found the video informative, I would appreciate a thumbs up. When you give me a thumbs up, that helps to support the channel. Of course, also, I would recommend that you hit that subscribe button. I do videos every single day, and these are informative. These get into the topics that are not covered in the mainstream media, and oftentimes are not covered in the alternative media either. So if you want to be able to get this information all the time, just hit the subscribe button, and you will see videos constantly about good information like you've seen today. That's all I'll mention. If you found the video informative, then I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. If you go over to the link in the description below, you will see the look inside feature, and that's going to allow you to flip through the pages of these books to see if you like them. Take care.